Welcome to another podcast of Master Investor Company. Glad to be here again on another money, business, and investing talk. If you're new to our community, subscribe to the podcast and follow us on all other social media platforms. Look for the logo at Master Investor. Check out our website and download our ebooks that we have available in stores right now. You can also read them on Kindle, the 10 New Rules of Money. Okay, we must understand the new rules, and what we have found out through our case studies here at Master Investors, the majority of people are still playing and operating in today's world with the old rules of money. So that's why it was essential for us to launch that book, which is a pool of financial knowledge where it's going to help you elevate the financial intelligence. And then we have our other ebook called How to Build Cash Flow with the Internet, Turn Passive Income On. That is a total guide on how to acquire assets and how to start, how to understand how wealth is created and how we can achieve financial freedom, escape the rat race, and how we can change our mindset to begin operating with the ultra wealthy's mindset, which requires a different set of core values, different money habits, different points of view about how we approach money and investing, how we create money, and how to obtain sound assets that we control with our companies, where they are working hard for us, they are making money for us 24/7, because the investment or business is providing a solution to the marketplace, and as much holding other assets and different asset classes that go up in value due to different factors that we will speak about on another podcast, but we also do talk about it all the time. So if you re-listen to our older podcasts that we have available right now here on this channel, then you will find the information that we're talking about now regarding different asset classes that exist and why it's important to diversify among the 5 different asset classes so that we can hedge for inflation and protect ourselves from down economies. But today's theme, I want to focus on talking about how to acquire wealth through real estate and how we can leverage simple tools that are free for us, and it will help us raise capital ultimately, and also will provide us with the lead position and the list of people wanting to acquire a specific real estate property. And basically, I want to talk about how easy it is to use a letter of intent to get our foot in the door into a commercial real estate property, where we are going to utilize that letter of intent to create money from thin air for our company, for us, and also ultimately have a position where we're getting positive cash flow because we put the deal together that whoever we're going to partner out with, because we are expecting more people to show up and wanting to invest in the assets. So we want to attract as many candidates as possible, and then we get to choose who are we going to do business with, because we are raising capital. The job number 1 of an entrepreneur is to raise capital. And the number 1 skill is to sell without selling, using systems and smart marketing. And the job number 1 of a master investor is to make money work hard, right? Raising capital through loans, through debt, seller financing. And I'm going to explain the deal that we are currently working on, one of them, which is something that I want to share with our community, because every deal that we do it can teach us a lesson where we can apply it into the next deal, and everyone can get an unfair advantage because we're getting this from real experience. So when we're looking at a commercial real estate property, if we find it off the market, meaning we have networks of different people in the field where they are providing us with information, real-time information, as they getting to know that a owner of a land or of a commercial real estate property is getting ready to wanting to sell the property, sell the asset, whether there's a hotel, a plaza, a mall, shopping center, industrial, right? There are different categories in the commercial real estate field. A good website to look at commercial real estate properties for sale, but not limited, is loopnet.com, and there you'll find the brokers' phone numbers of the sellers who we want to get in contact with ultimately. So we want to begin having a conversation and talk to these brokers, because at the end of the day, the brokers are connected with owners of commercial real estate properties. So we could get a lot of deals off the market, because remember, when it's on the market, usually the party's over. Okay, we want to get at the very beginning. That's why when you look at our book, How to Build Cash Flow with the Internet, and you will read about the chapter on the cash flow circle, you understand that we all form part of this cash flow circle, because we all have to use money in order to live, in order to pay for our living expenses, food, clothing, etc. We have to have money to buy the clothes, unless we're getting a sponsor and we're now getting free clothes because we have such a strong brand that other individuals want to partner out with us. In exchange of that, they're getting advertisement through our brand. So ultimately, it's a form of money, exchanging our credibility with other people. So, however, the point is that we have to use money until the very last day that we are on this earth. Therefore, we should master the game of money. Okay, we all have an investor inside of us, and we can either make that investor an average investor or a master investor. And we have to choose our friends, the people that we spend time with, where we invest our time wisely, because everything matters. Even the smallest decision and choices that we make in life, they have a huge impact in the ultimate ideal scene that we will be living in the future. So every decision and choice that we make on a daily basis really matters. And I want us to think about everything that we're doing. So we have to be speaking about money. If we want to have more wealth in our life, we need to find ways that we can help other people without us being in there, whether it's creating our own products, whether it is acquiring a real estate property that's providing housing to 50 people, right? Or 12 people. You can start with a duplex. Whatever it is to take the leap of faith, is all worth it because of the freedom that it provides. So when we're talking about real estate properties and other assets here at Master Investor, we ultimately want us to focus on the total freedom that these assets will bring us, because we no longer have to ever work to pay for the bills and or work to have an experience. We have assets that are producing passive income and capital gains income, even during bad economies and periods of hyperinflation, which actually is leverage to us. We use this as tools to make us wealthy. The times that we're living now, because we can raise capital faster, because the banks are looking for good debtors, for people that can control debt, like we are helping others to understand here at Master Investor. We're more than an investment management company. Our mission is to elevate the financial well-being of humanity through high-quality financial education made simple. We look at opportunities to build passive income and true wealth. And the reason why we're more than an investment management company, because we also create products and services to help humanity become more aware about how money works and how we can invest and be the master of money. We truly believe that everyone deserves to bring the master investor out of them and maintain that status by controlling money at all times during their lifetime. And that's the key, is to give us the freedom that we need in order to provide us with the space to live through our potential and create the life that we came here to build through our purpose in life. We all have different skills and we are special in some way or another, and we have to deal with money. So everyone has that in common. We have to deal with money. No matter who you want to be or who you are becoming today, we have to deal with money. And the better we get with money, the better we can become that person that we are destined to be. Therefore, we have to focus on mastering the ability to read financial statements, starting with our personal financial statement. That's why I recommend everyone to get our book, How to Build Cash Flow with the Internet, Turn Passive Income On, from our website, because we turned that into a digital course. So you will have a financial statement that you can download to your Excel and fill it in so that you know exactly where you are financially today. And the first step is to figure out where we are today financially so that we can begin to focus on what we need to take from our current life and turn it into an asset, okay? How we're going to turn our skills, our ideas into real assets that are producing passive income and capital gains income. So there are 5 different asset classes. We talked about number 1 was real estate, number 2, business, number 3, crypto, number 4, paper assets, number 5, commodities. And we want to focus in acquiring assets from different asset classes, among the 5 asset classes that exist today. Because the more assets we have that are sound from different asset classes, that means we will always do well in any type of economy. I want us to always be prepared for any type of economy, because we understand that the economy goes up and down. So the letter of intent is a tool that we use here at Master Investor and our partners to get in front of deals and close the doors for everybody else, where it gives us time to raise the capital. Even entering the deal during due diligence, it allows us to renegotiate the price in which we came in with the letter of intent. In other words, it could be X, Y, and Z. By the time we're done with due diligence, it will be less than that amount, which was mentioned during the due diligence period or before the due diligence period. So we can, due diligence periods, like the second most important words in business. The first ones are cash flow, and I would say the second ones is due diligence, because it's all about the due diligence. We have to crunch the numbers and we have to figure out how we can improve the asset that we're looking at. If we're talking about real estate, in this case, we're submitting a letter of intent to the broker because we're interested in the real estate property that the broker is representing for an owner of that property. And so the letter of intent tells them that we want to do due diligence for 30 days, and we understand that the price of the property is this, and the owner of the property is offering seller finance in this instance. And what we need down, for example, will be a 1.5 million for the property that we're looking at right now. It's across the airport, and the total is 3,950,000. The seller is willing to do 2,450,000 seller finance for 15 years at 7%. So now we use the leverage of the seller finance which is a great tool to acquire healthy assets that will produce enough passive income to pay for all the loans which we have with the parties. And so I will explain this deal, but I want you to focus on the letter of intent, because the letter of intent can be created very easily, and is a tool that will help us get 30 days extra to be able to raise the capital that we need, whether we need to go and approach the bank or we need to call our contacts who have the capital liquid right now, so that we can acquire that asset, improve the asset, and control it for infinite return on investment. That's the ultimate goal here that we are achieving at Master Investor, and we want to help everyone to understand that we can all do it, okay? You can start with a duplex, you can start with 12 units, you can start with a project that maybe increases the units. We're looking at this project right now, close to the airport. It's 1 acre, has 12 units in front. It's approved to do 18 more units, and in other words, it's approved to do 30 units plus 45 or even more. Today we had a meeting with the broker of the property, and he said that he was at the city and they told him that potentially could be even up to 50, 60 units in this 1 acre. It's a big property. There are 12 units that would need to be demolished. They're still operating the 12 units through 1 year lease of tenants, and they live there. It's I think they're 1 bedroom, 1 bath studios. And what we want to look at is the cash flow that is bringing right now after all expenses are paid. In this instance, the business is bringing $180,000 gross approximately, and the expenses are around $40,000. Okay, but this is not including the loans. Okay, and I'm going to explain how that's going to take place here in this particular deal. And so the total after expenses, the total net operating income is $140,000. Out of that $140,000, we need to now subtract the loans that we have in order to acquire the property. In this case, with this property, I'm applying 100% finance on this deal, meaning that the $1.5 million that we are required to pay at the closing date is going to also be raised through a private institution that provides capital for acquisitions in commercial real estate and also other asset classes. But they have to be lucrative because it goes into an underwriting process, and they're like the bank, and probably even more strict because they need to secure that, okay, it's a healthy investment where they're going to get their money back within 15 years at a certain percentage, which in this case is 7%. Okay, so the 1.5 million is 7% for 15 years, and the 2.415 million is for 15 years at 7%, which is seller finance. So we're raising the entire capital in this deal. Now we're going to have 2 loans to pay, and that is going to come up, let's say, to $100,000 each loan per year, a little over $100,000. So if we're looking at how the numbers are right now, we're negative cash flow, but we have a solution to increase the bottom line. So when we take over a real estate property that is currently running with tenants in it, we want to see if we can tweak something immediately in the property so that we can increase the bottom line and the cash flow. So there's a provision in each tenant's contract where they have to leave within 60 days. So we're going to let everybody know that they have to leave within 60 days, and we're going to turn this into units, into the 12 units that are there, but we're going to have Airbnb and flight attendants because it's literally right across from the airport, and we're going to put bunk beds. So each room, each unit will have 6 beds or 3 bunk beds, and the flight attendants whose base is in Miami will pay per bed around $600 dependent to maybe 750 with laundry, etc., because we'll have laundry machines in a room next to the property so that they can do the laundry and buy their soap, etc. Just their basic needs that they can go ahead and use that as a base where they can sleep. It's right across from the airport, literally less than 3 minutes. We can see the back of the airport from the property. And so right now we're going to immediately do that when we acquire it. And so if you do the math, it will increase the cash flow to around $500,000, because it's $43,000 per month. Yeah, per month. If we do 600 times 6 beds times 12 units, it's around 43,000, and then we do that times 12 months, it's around $500,000, $18,000. I'm doing this on top of my head, so the numbers might be a little off, but if you do the math, then you will understand that if we just charge 600 per bed, so it's going to be 6 beds per each unit. So 6 times 600 times 12 units times 12 months is around $518,000. Then out of that we take the expenses. So let's say if right now the expenses of that is $40,000, let's say let's make the expenses $100,000, maintenance, taxes, insurance, etc. Let's make it $100,000. And then the loans, the 2 loans that we have, the $1.5 million, which was said to be around $100,000 per year. So now we have $200,000 on expenses, right? And then we have another loan with the seller. We need to give him $100,000 out of that $500,000. So now we have $300,000 in expenses. Let's say $350,000 of expenses, including all the loans, tax, properties, insurance, all the maintenance, everything for the 12 units. And that's not counting the laundry and the other things that we may have there as an option for them to upgrade to get additional benefits, maybe storage, etc. But just for now, to take over the property, we can increase the cash flow rapidly to $500,000. Right now it's bringing $180,000. We'll bring it to $500,000, and then taking out the expenses with the loans that we have in place, which is 100% finance. Then now we end up with, if we minus $518,000, let's say minus $300,000 of loans, then we end up with $218,000, around $218,000 of positive cash flow, or also known as positive passive income. Now that is infinite return on investment, because we are controlling debt. We use the seller finance, and we use another loan from a different institution which provides capital. And now they're both getting their payment back at 7%. It's 100% finance. We control the debt, we control the cash flow, and every time they get paid, we also get paid as a company. And that is good debt. That is literally how we can get infinite return on investment, which is the holy grail of investing. Is when we have no money invested into the deal, we're using 100% finance, meaning we are 100% in debt to acquire this investment that we put together, and we control the cash flow, we control the investment, and we are creating positive cash flow every time we make a payment to everyone. And that is not including the 18 units that we will be building on the back, which will be a total of 30 units, potentially more, today the broker said we could probably go up to 50. And then there's a lot behind that lot that is also for sale, which we're looking at, and is approved to do 2 duplexes. And the broker say if we add that parcel into our existing parcel of 1 acre, then that 2 duplexes can be actually increased to more units and probably create another 15 units back there. So it looks like a great project, and more when it's 100% financed, like I said, and we can reach infinite return on investment immediately. Then we're creating money for nothing. We are literally raising capital because money is created with debt. Here at Master Investor, we understand how money works. So we understand that money after August 15, 1971, it stopped being real money. Money became fiat money, monopoly money, paper money, a currency, and just an idea backed up by confidence. Money is created with debt. And today, we can do exactly what the government does, which is print money. So when we use debt is tax-free, and when we invest that to build passive income through controlling a property or a business, then we are positioning ourselves to minimize legally taxes all the way to zero. We want to be a tax-free entity. We want to keep as much money as cash flow as we're getting. So if we have a positive cash flow of $218,000, we want to keep that because we have minimized taxes. We want to keep that as an entirety. We don't want to pay anything on taxes on that money legally because we have strategized where that money is going to be reinvested and put into, where there's also living expenses or vacation expenses, because they can all be turned into business expenses when we talk about business, for example, during lunch, and we talk about expanding the sales and the strategies that we're going to be implementing in order to increase the bottom line. That will help us reduce taxes, and everything can be turned into a business expense, but we need to have the right professionals around us. And I always suggest, like we always say here at Master Investor, we're protecting our freedom and the total freedom that wealth brings to us. So we will never do anything to jeopardize the freedom. So we want to make sure that we follow the law, understand the law, and we use the corporate and tax code to minimize taxes as is permitted by law, because we have the right CPA and the right business attorney and our team who is helping us to do tax strategy, so that we plan for each dollar that we're getting, so that we can maximize profits and keep as much money as we're getting from our businesses. Okay, there's no point to make money and then give it right back to the government when we can actually reduce taxes by using debt, because debt is tax-free, and then also creating passive income through sound investing. Okay, so letter of intent is how we got to get our foot in the door here, and I'm gonna have this letter of intent added into the digital course, How to Build Cash Flow with the Internet, Turn Passive Income On, because even if you're investing in real estate, you have to do it through online. That's why this ebook, How to Build Cash Flow with the Internet, Turn Passive Income On, is essential, and it's a must read, because it's going to literally take us step by step on how to not only create sales on autopilot using systems online, if you want to get started with digital assets or physical products that you don't even create and you don't even store. We have a whole roadmap on how to do that, and also how to acquire your first real estate property and cash flow and stock and other asset classes that we talk about within that book. But we covered what is wealth and the topics that we need in order to have success when it comes to investing. Okay, so make sure you use the letter of intent to position yourself in front of the seller as number one, and then it gives us time to raise the capital. Remember, we want to have a company, so the letter of intent should be in the name of our company. And we need to also take a look at the letter of intent that I will be putting on our digital course. When you get the ebook, you'll get the letter of intent. You can change the name, and because it's pretty much universal, change the price of the property, and then you sign it underneath your company will sign it, which will be the chairman of the company. And so you'll sign it and you send that to the broker, and the seller will return it signed. And then you can do due diligence. It doesn't bind anyone to buy anything. It's just, it reserves 30 days for us to do due diligence, which means that we are going to do a deep research into everything that we want to do in that property, so that we can take a calculated risk and can ensure that the returns on investment will be healthy and fast and efficient. We want that money to come back immediately because we have 2 loans to pay back. Okay, so with that being said, I hope you have a great rest of your day. I'll talk to you on the next podcast. Thank you for listening, and remember, today money is created with debt. Debt is tax-free. Bringing the good and bad news of money, the business principles that work in all economies. Bye for now. Talk to you soon.